All right, guys, back to work. Man, a wild session comes to an end. Back-to-back big moves here on the charts. And I'll tell you, it might be tough to make sense of these wild moves right now, right? But I'll tell you, the 60-minute time frame, the hourly chart, it may have just tipped us off to what's really going on in these markets right now. And more importantly, where the best entries and exits are waiting for us tomorrow on Non-Farm Friday morning. I have a number of trades I'm tracking for tomorrow. By the time we're done this video tonight, you'll have an easy roadmap to make some money as well. Before we jump in, though, into my favorite trades for Non-Farm Friday, if you guys enjoy these videos, as always, make sure you subscribe to our channel, hit that like button, and as always, give me a heck yeah, give me a shout out down in the comment section below. Thank you guys so much for tuning in, supporting our channel. It's been a wild week, a profitable week. Let's go make some more money on Non-Farm Friday. Charts are all ready to go, as you can see here. NASDAQ triple Qs are all ready. The E-mini and the SPY is ready. I have four important clues that are telling us where I think the winning trades are coming for tomorrow. Two of these clues are right here on this hourly chart, these higher time frame 60-minute charts here. It looks like one of those clues, it looks like the 60-minute time frame is developing into a bear flag. Bear flags, of course, are basically bull channels in an overall bear market. They love to rotate back and forth like a bull channel should, right? So bear flags want to rotate back and forth like that. That's one very important clue we have on the hourly chart. The next clue, though, might be the most important clue. Anytime we have big move down, big move up, big move down, anytime we see big moves back and forth like this, one side of the market isn't able to hold control of those moves, it usually means there's a range in here right in the middle. And ranges, they love to rotate back and forth, right? Back and forth using these pendulum swings. So knowing that, it definitely looks like there are some bear trap patterns or bear trap opportunities around these lows. We'll cover the bear traps. We'll cover some breakout pullbacks going lower here because that big non-farm payroll. Those are two very important clues. But I have two more important clues, even more important, I think, on the tick charts, the faster time frames, which will kind of bring this all together and help us time the best entry, because we're not going to trade, we're not looking for entries off the higher hourly chart. Before we do that, though, and talk entries and the tick charts, the faster time frames for tomorrow, let's check our schedule for tomorrow, because tomorrow is another big news day. This week has just been hitting us every day this week. Tomorrow, of course, is Non-Farm Friday, the first Friday of every 1 month. So we do expect there to be some fireworks tomorrow around that 8:30 employment number. And also, too, you want to remember, too, tomorrow is a Friday morning. Fridays are not like other days of the week. You see, what happens is the markets get illiquid on a Friday afternoon. We also, as human beings, we aren't the most disciplined traders on a Friday afternoon. So I have what I call the Friday mindset. I want to get in early when I'm at my best and the markets are liquid and the markets are behaving at their best. I always try to take a quick profit on Friday morning, get in the green, right? Get something green on a Friday morning, get rid of risk, bump those stops to point of entry, remove the risk on that. And I'll tell you, Fridays, because they get illiquid in the afternoons, and because traders tend to gamble more with their rules on a Friday afternoon, markets love to run on a Friday afternoon. Go back and look for yourself, right? 2.5 out of 5 Fridays, about half the time, you get those big runs on a Friday morning. So again, we will get some fireworks, I would imagine, tomorrow with the employment number as the markets try to make sense of if the Fed will cut rates in the month of September. And again, keep that Friday mindset, right? Get in early when the markets are good and we're at our best. Take some profit, right? Get some green out of the market tomorrow and leave a little piece of that as a runner, because I'll tell you, a runner on a Friday morning can make your entire week or make up for a difficult week. So that's our schedule for tomorrow. What's on my mind tomorrow morning. Now, back to our charts, though, because it's good to know when that news is, but the money is made on the charts. I mentioned earlier, there's two important clues on the hourly chart, right? This big old bear flag, which looks beautiful for rotation back higher. But these bear flags, they fall apart all the time. The more important clue here is that big move, right? Back and forth, back and forth. It looks like one big range developing here on the hourly. Now, let's time some entries. Entries are not easy on time charts. I like to use tick charts. tick charts, I believe, make pattern recognition a hell of a lot easier. And by the way, all the time frames, if you're here for the first time right now, upper left-hand corner, that is a 7,000 tick chart. And that yellow line right there, you can't see it very well, that is the 21 EMA. I believe is the only indicator you need to find lots of winning trades each day. Now, there are two more important clues here on the tick charts. One clue is this new trading range we see after that big run. What a wild past couple days here. But again, when you look at it in the context of the 60-minute time frame, it makes more sense, right? Now, ranges. The most important thing about ranges is they love to rotate back and forth. If there's one thing you learn from watching my videos, it's rotation back and forth. So knowing that, buying low, selling high, it's bear trap below, it's bull traps off the high. And of course, because we're so bearish, it's potentially now breakout pullbacks below that low here. We're going to cover more of that as we go deeper. But that's definitely one big clue is this trading range in front of us. The second big clue is the size of this move going lower. Anytime I see a big move like this, I don't want to sell low. I want to sell high, right? And usually that means a two-legged pullback and a run back down to allow the sellers to sell high. I mentioned earlier on the hourly time frame, this could be one big bear trap spot down here. And so I will talk about tonight if this thing breaks and runs all the way back up again, because would anybody be surprised if this thing just whoop and runs right back up again? Nobody should be surprised because of that bear flag and that range you mentioned there on the hourly chart. Let's cover this move a bit later on in the video. We'll cover this a bit later on. My favorite trade for tomorrow, though, is certainly going to be that bear trap below that low. Now, if we run lower here, we're very bearish overall right now. So I can't pick the bottom, right? If we've learned one thing the last couple days here, right, we cannot blindly buy off support or sell at resistance. A bear trap pattern is very simple. What I'll do is I'll let the rookie bears, because again, you wouldn't want to sell down here under a range after such a big move down already, right? You're asking to get squeezed. If I can get bears trying once and bears trying twice, I'd love to get a bear trap pattern. We teach this, by the way, in our free video classes, right? A technical bear trap pattern and a run back higher. Now, usually these bear traps get stacked on top of each other. What I mean by that is if we can get one bear trap as it runs higher, look for that separation off the moving average and look for basically another bear trap, higher high in price, a trap below that low, as this thing tries to rotate. Remember, ranges like to rotate. So the amount below the range, the amount above the range. I don't know how far that will go. I don't know how big that move down will go. What I do know, though, is if those bears get trapped down there, I would love to get that bear trap pattern. We also call these crown reversals in our trade room. As we go higher high in price, that trap right below that low. Notice there, it's a higher high and a trap right below that low. Higher high, a trap right below that low. Now, this would be a great reversal or bear trap pattern off that low. Sometimes, though, we get this move down there and it V bottoms off that low. V bottoms are tricky. You got to make sure you're prepared for this mentally. If it V bottoms, right, if there's so many bears that get squeezed down there, oftentimes it'll snap back up and start grinding higher. Remember, anytime a market grinds away from the moving average, watch closely. Draw a trend line off the highs, bring it down off that low. Now look left, very important, look left. Find some prior swings, those swing lows. This is where those bear traps are going to be. What I want to do is I want to find one of those swing lows that lines up around the low of that channel. In our free video class, we talk a lot about the first test is the best test, right? First test off that channel. See that channel right there? First test is the best test. In all reality, a bear trap be great off that low if it V bottoms. Now, if we do keep going lower tomorrow, right? If we do keep going lower tomorrow, and this thing really tanks off that non-farm payroll number, we don't want to sell low. Now, that trading range comes in and it basically acts for a breakout pullback. This whole area now becomes an area of resistance now. And pay attention to these are very important, very common too, by the way. If we get that strong run down off non-farm payrolls, now we start using the underbelly of that range for a breakout pullback. Now, breakout pullbacks are very simple. Think about a two-legged pullback. One leg, two leg, remember, a bit more than a measured move, right? A bit more than a measured move. Now remember, we don't pick that top. We wait for those buyers to come in. Let them try twice, once, twice. Why twice? Because I want to use the stops. Once they try twice, now I've got you. Now you're trapped in. We'll sell into those stops now, trying to go back down to retest the low. These oftentimes are a failure pattern. We teach this course again in the free video class, right? A two-try failure, 1, 2. Then as we go lower, the market wants to go back to retest that low. This is where you can grab a classic or technical bull trap pattern. It's a lower low in price and a trap right above that high. When I think of a breakout pullback, look for that 1, 2-legged pullback, a bit more than a measured move. Trap those bulls in with a failure pattern and then grab that technical bull trap to go back and retest that low. Now, let's slow down for a second because we've covered a lot so far. I know most of you guys watching right now, you know these patterns. You don't trade traps, failures, two-legged pullbacks. You're making money these already. But if you're watching for the first time right now, I get it. This is advanced charting tactics right now. So if you're here for the first time right now, if this is way over your head, don't you worry. I teach this entire strategy. I have hundreds of examples of failures, trap patterns, V bottoms, breakout pullbacks. I teach the entire thing in our free video classes. I'll put a link up top here for you, upper right-hand corner. Don't you worry. I'll hook you up, upper right-hand corner. Grab the link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room so we always know where to find the best winning trades you stay. More importantly though, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, failures, traps, a whole lot more. Guys, the markets are way too good right now not to be making consistent money. If you're tired of missing the best trades today, if you're still struggling to qualify for a funded account at Apex or Top Step, again, grab that link that popped up there, take that free course. Perfect for anyone who is serious about making money in these amazing markets right now. And also be aware too, I'm gonna put all the important links tonight in the description of the YouTube video, put the free class links down there. Start first. If you're here for the first time right in the free class, learn the roadmap with the free video course. Also too, we trade together every morning in our trade room. I'll put trade room membership information in there for you as well there. Also too, I post updates on Twitter, videos, charts, mindset stuff. If you're on Twitter or X and you want to learn more between these videos, give me a follow. Again, all the details you guys will need, the description of the video. But again, here for the first time right now, you want to learn more, learn the roadmap, the free video course will give you the tools you need, start making money on your own right now because again, these markets are way too good to be still struggling right now. So that is my favorite trade for tomorrow, right? That fake out breakout off that low, that bear trap off of that low. Now, what if this thing starts to rip going higher? Because you know there are bears out there, right? You know there are bears that are waiting to whack this thing right back down again. But I mean, come on, right? Look at the last couple days. Big move down, big move up, big move down. This could easily begin to squeeze and run all the way back we came from today. So how do you know? How do you know to sell this thing or when to buy it? That's a very good question. Something took me a long time to learn. I'll teach you guys here in a few minutes here on this video. How about some NASDAQ? NASDAQ's getting lonely over here right now. I'm here for you, NQ. So again, on the 60-minute time frame right now, it's pretty obvious, right? We're bear market overall. We talked about last night, the buyers had a silver platter, a golden opportunity to take this thing and rip this thing, and obviously they failed miserably, right? They failed miserably. Take control of the market. So bears have all the control right now, but again, it looks like the bear flag is starting to form, and those bear flags are going to want to rotate back and forth. Again, big move down, big move up, big move down, big move back up again, right? That range rotation back and forth. That's why I love the idea of some bear traps down here. But again, if we don't get that bear trap, how do we trade this thing now if it begins to rotate going higher here? Let's get the tick charts going here. Tick charts, of course, tick charts make pattern recognition so much easier. 2 big clues here on the tick charts. One is that trading range, right? Ranges are magnets. They love to rotate back and forth, right? Buy low, sell high, buy low, sell high. We talked about a couple of those earlier on the S&P. Big clue here is, speaking of big, is the size of that move, right? This huge move going down. Now, normally, whenever I see a big move down like this, I almost always look for a two-legged pullback. Remember, a two-legged pullback is a bit more than a measured move, right? Two-legged pullback. I don't want to sell down here. I want to sell up here. I want to sell high, right? We don't chase after these moves. We sell high. So normally my favorite trade is a two-legged pullback, a bit more than a measured move. Again, we're not going to pick the top up here, right? Because for all I know, we're going to keep on going higher and go right back to that range we came from this morning, right? Could easily happen. However, if I start seeing this thing pull back now, and these buyers try once, these buyers try twice, right? This is their chance. This is their chance to grab this and take control of it. If those buyers try once to get in long, try twice to get in long, that range below us is a magnet. We get all that bear momentum right now. That is a classic failure pattern. And remember, failures love to run lower as the moving average comes over. Look for that separation off the 21 EMA. Remember, anytime a market separates and grinds away from that 21 EMA, this is why the 21 EMA is so valuable. It tells us all this information. When it grinds away from that moving average, lower low in price, bull trap pattern off that high, that's the sequence we look for after a big move, right? Big move down. Nobody wants to sell low. At least I don't want to sell low. Wait for that two-legged pullback. Again, just high enough, a bit more. Think about a measured move that goes a bit too far. I want this thing overextended. All right, I want it overextended. I want to rope in these inexperienced buyers here. One try, two try. Why two tries? I want their stops, right? Because if you're stuck long, you stopped out of your long trade, you're selling your way out. These are areas where everyone is selling, right? Everyone is selling. The buyers are selling and the sellers are selling. Everyone becomes a seller in that situation. That's why they work so well, right? Again, it's basically a bull trap. I call these failure patterns in our free video class, right? Our failure pattern into a technical bear trap, right? Technical bear traps are low in price, above the high, right? That technical bear trap. And remember, the amount above, the amount below, a good example, right? Leave that runner. Now again, if we find our way down here, these lows here, what do you think is gonna happen, right? If we go up, we trap those bulls in, right? Run back down again. What do you do down here? You don't sell it. No, right? You do not sell it. What do? The bear trap pattern again, right? Bears once, bears twice. Now remember, I could be a lot more aggressive being a seller above the high here because it's an overall bear market. Below the lows, it's a lot more of a cautious entry. It's a technical bear trap entry below. I have to get that technical bear trap. It's a bear trap pattern here. It's a buyer failure up here. The reason why this is a failure pattern, right, and this is a bear trap pattern is because of momentum on the 60-minute time frame. Again, as mentioned earlier, I teach the entire roadmap for this stuff in that free video course linked up there that popped up there again, upper right-hand corner. Learn that strategy. Learn why there's a difference between failures and bear traps. It's a big difference. You'll learn more about that stuff in that free link up top there, upper right-hand corner, right? So keep looking at those bear traps off that low. So two-legged pullback. Now, if at any point, if we get that two-legged pullback here, we start getting up, right? And all of a sudden now we start separating off that moving average, right? Separating off moving average. Look over here, right? If they start separating off that moving average, what does that tell you? Remember, separation equals strength. So if we pop up, we start separating off that 21 EMA, right? Get all the other indicators off your charts. I don't want divergence. I don't want anything else besides this 21 EMA because all it does is cloud my judgment. It's too many voices in my head. When I see that pop in separation now, there are two things to look for, right? Watch closely. First of all, anytime we pop and grind like this, mark that high, mark that low, look left, find those prior swings, bear traps. Right? Bear traps. Again, it's a combination of the low of that channel, right? Low of that channel and a prior swing low. Combine the prior swing low with the first test of that channel. Mwah, that's a gorgeous entry right there. Tough to lose money if this thing is grinding higher away from that moving average and it's the first test off that low. Now, of course, I love bear traps. A lot of times, right? A lot of times we'll get a bear trap. The bears will come in, try to short that thing back down again. They get stuck off the moving average, that's where failure patterns live. Failures into pullback combos, pullbacks into strength trades, right? You guys know this. It's called the price action cycle. Now, one cool thing about range breakouts is that the breakout leg becomes the measuring leg. Okay, it's not just bullish, right? It's all directions, right? But the breakout leg becomes the measuring leg. If you want to make more money, don't trade more often, okay? Don't trade more frequently. Stay patient and let your winners run. And a good way to do that is by knowing that whenever I see a range breakout, the breakout leg, right? In this case, this leg right here is the measuring leg. So once we know how big the breakout leg is, if we can get that entry off that low, now we know, okay, leave that runner roughly equal to, right, give or take a few ticks there, right, roughly equal to the size of that breakout leg. Okay, that's one scenario to buy this if we get that two-legged pullback. And again, right, remember, we don't pick tops and bottoms, right? If it pulls back, 1, 2, okay, there's your failure pattern, right? They're going to show us what to do next. Right? But if this thing pops up here and it starts grinding and separating, okay, now we know what to do now, right? We don't need to predict. All we do what I do is I plan my trades, then I can trade my plan the following day. And I'm doing it right here with you on this YouTube video, right? If it pops and grinds, now we know. Right, adjust our game plan. Now from the channel, right, mark that low. Okay, right. That's a pretty simple idea, right? Now, often what happens is, oftentimes we'll see this thing pop up and it jumps, right? And it jumps up like this. If it jumps up like that, right, and really separates off that moving average, okay, that's also a giveaway as well. Now think about this. This range, right? This range is we mentioned earlier a breakout pullback below. Same idea, right? Same idea. Breakout pullback above. Okay, now this one seems a bit less likely for tomorrow because we've been grinding back and forth. However, if we do get that real strong run going higher here, again, think about now what was resistance now becomes support. And I can go one step further than that. When I'm gonna breakout pullback, remember, a breakout pullback is almost always gonna be a two-legged pullback. A two-legged pullback under the moving average, one leg, two leg. Think about a measured move that goes a bit too far. Again, the goal of a two-legged pullback is simple. I want this thing overextended, right? I want this oversold, whatever you want to use to describe it, right? I want it overextended. Because when things are overextended, what happens is rookies get trapped. It rolls lower now. The bears go, oh, we're now going lower. Let's sell once again. But they're failing to miss the fact of that big 60-minute time frame, that big flag on the 60-minute time frame, and the very strong breakout going higher. Great spot here now. Failure pattern, right? Bears try once. Bears try twice. Again, we're not going to blindly buy it, right? For all I know, it'll crush right back down again. I don't know. What I do know, though, is when it pulls back, if I start seeing these bears struggle right here, now I know what to do now. Now I know your stops are right there. Now I know the rookies, their pain is right there. I will never forget the first time I coached my first mentor, like a jillion years ago. He would always say, Joe, the easiest money you'll ever make in day trading is catching traders on the wrong side of the short-term momentum and literally buying right into where their pain is. Right? Because when those stops get hit, those bears right here, those sellers, they get squeezed, they become buyers. Again, situations where everyone is a buyer. Buyers are buying low and the sellers are getting squeezed, getting stopped out, and they become buyers as well. Remember, these failure patterns, they want to go where? Think about the breakout leg, measuring leg, right? Breakout leg, measuring leg. That's the formula for the target up top there. On the way to that target, find that separation, higher high, trap low. A lot of examples of these in that free video course, and they'll give you the roadmap there, right? Going higher. Failure, right, into trap combination. Failure into pullback combination. A good example of that inside the free video course. Again, this one doesn't seem as likely for tomorrow, but again, I don't know, right? Now we have a game plan though to trade it if we do. So now we know, guys and gals, how to trade this if we go lower, right? How to find those bear traps as we go lower, right? How to trade this if it runs lower, two-legged pullback, right? And the breakout pullback back down again. We also know now if it runs higher here, how do we know when to short this thing back down, right? Or when to buy it, right? If it starts to squeeze and run higher. That's the game plan for tomorrow. Don't forget, tomorrow morning, 8 o'clock Eastern time, every morning, 8 a.m. Eastern time, come trade this stuff with us. Guys, the easiest way to start making money in these markets is to learn and trade along every morning in our trade room. I want to put all the important links tonight, description of the YouTube video. Again, if you're here for the first time right now, welcome aboard. Take that free video course, learn the roadmap, learn the setups, start making money on your own. This does not need to be that difficult. Again, the links that you'll need there, description of the YouTube video. Any questions, any trouble getting started, use live chat, send me an email, call the office. I'll be here every step of the process, answer questions, answer calls. All right, guys? Great week so far. Let's keep buckling down tomorrow, follow the game plan, and we'll make some more money on Friday morning, guys. Hope you guys learned a bunch in the video tonight. Hope you use this knowledge to make a killing on Non-Farm Friday. And hopefully I'll see you sometime soon trading with us in our morning room at 8 o'clock each time. In the meantime, be well, be nice to each other out there this weekend, and be here next time. Adios, amigos. Bye for now.